Good morning, everybody. I'm Hudson Hollister. I'm one of the founding board members of the Web3 ID Coalition. I'm so excited to see you all here, and I'm excited for the remote audience. We have an incredible lineup planned, bringing together both private sector, decentralized, and Web3 ID companies, and public sector policymakers. I'm especially excited for our congressional guests later on this afternoon. When you think about the promise of Web3 IDs, use cases are tremendously important, and one of the pushbacks that we've heard from policymakers is that there are too many barriers for the adoption of decentralized and Web3 ID technologies in the private sector or in any industry. And one of the ways that we are proving them wrong is to point to the use cases that are already happening. There is almost no industry that is more complex or more heavily regulated than banking, and that's why we're so excited that in a minute I'm going to have the privilege of welcoming to the stage Peter Braunz, the Chief Operating Officer of Genubank, to explain how the use of Web3 ID technologies in order to comply with banking regulations and in order to facilitate access to banking and individual ownership of banking data is actually happening, and it's happening right now. Banking is not the only early use case of Web3 ID technologies. We have so many other potential pilots and prospects happening in the public sector and private sector. You'll hear more about that today, but banking is surely one of the most interesting. So I'm going to progress over to one of these chairs here, and in a minute I'm going to ask you to, actually right now I'm going to ask you to join me in welcoming the Chief Operating Officer of Genubank, Peter Braunz. Good morning.
Good morning. Thanks for having me.
Sound check. Yes, here we go. I'm excited to be joined here by Peter Braunz for this discussion. We decided to move what was going to be a keynote to be a little bit more fireside-ish, which is why we're sitting side by side and why I've got to stay on the stage with you. Would love to, in a minute, Peter, ask you to describe what got you into your passion on Web3 and decentralized identification. But first, I want everyone to know the incredible credentials of the fireside speaker that we've got next to me right now. Not only do you have advanced degrees in both business and mathematics, but you've also served in the senior technology leadership of at least 4 banks, and culminating in serving as Chief Operating Officer of Genubank in Nevada. Peter, why don't you start out by telling us about your background and where the passion for decentralized identification came from?
Oh, thanks, Hudson. Yeah, I'm happy to be here. Really excited to be here at the inaugural Web3 ID Forum, so thank you for having me. I've been working in financial services for about 20 years now. The last 7 years or so, I've been building financial services at the intersection of traditional finance and digital assets. So building settlement networks, building payment rails, credit products for the digital asset industry. And so diving deep into digital assets, it's been a rough week for digital assets. We don't need to...
We'll ask about that.
Yeah, okay. But what really became apparent to me, when you're starting to originate these really complex digital asset businesses, and you're trying to do the right thing by the U.S. regulations, whether that's the CIP standards, the kind of like customer identification programs that you need to employ at a bank, KYC, KYB, know your transactions, BS, all of the acronyms you can imagine. It really, the way that the fiat system is built, it's really built on monitoring, right? And it's really reactive. And about 3 years ago, I started reading more and more and started to connect people into the area of early kind of Web3 ID, SSI, self-sovereign identity, and started connecting with a lot of the thought leaders and reading a lot. And it turned into a passion of mine. So I think we're at a really interesting space where identity is actually going to move on-chain. Decentralized identity is the closest thing I've seen to some of the principles that we've seen these thought leaders lay out, and pairing that with programmable money is something that I think is an unstoppable force of innovation. So right now we're going through a little bit of some headwinds. I think there's some lessons to be learned. I don't think anybody's really doing it well yet, and I mean utilizing a lot of these the decentralized ID, the Web3 ID kind of principles, putting things in place. But the potential is very real, and we're building. So we hope to be able to be a really good test case to show how you can be doing it in a safe and compliant manner that's not only powerful, but privacy preserving.
Peter, your institution is the only one that I know of that is working toward that specifically, working toward being a use case for decentralized identification. So I want to ask you about that in a minute, but let's set the stage a bit before we do that. The internet wasn't built with an identity layer.
Kim Cameron, that's right, yeah.
And I know that's one of the things that helped to motivate you, the notion that an identity layer could be created, and that's one of the reasons why a few years ago that became your passion. How did you start in the banking industry? How did you start to introduce that concept to senior leadership? The concept of new ways to manage identity for banking.
I would say that I'm currently aligned with a bank that really understands the value of privacy and compliance. Some of the banks that I've worked at in the past, while being technologically progressive, banks in general view compliance as a cost center, not a profit center. And you're not likely to find the embrace of this disruptive technology inside a lot of banks. And so it takes a special bank. So I'm very, very fortunate to work for an ownership group that doesn't have this shareholder pressure to necessarily maximize profits. We have a private shareholder, and literally his motivation is to not to maximize profits, but to revolutionize the way that financial services can be powered by privacy-preserving credentials. So that's a privilege that I have. Outside of that, I wouldn't say that that's a reality. But there's some great banks that are working on the problem. I have a lot of respect for some of the financial institutions that have been kind of circling around the space. I think that he's played it better than almost any. Jamie Dimon at JPM, like he's got real interesting pockets of innovation. He's managed the top level communications really well, but they're actually doing some really interesting work. There's pockets of innovation in some of these large organizations. And so I think that gives us hope that we are looking for the right use case. And I think we're close. And I think that, there's some innovations around programmable money that are really going to be this world-changing kind of use case. So we're close. And I think over the next 3 to 5 years, it's going to come to fruition.
In a minute, I want to ask you about what specifically Genubank's been doing so far and when you're looking at what those initial use cases are. And then after that, I want to ask about the regulatory aspect, how you see decentralized IDs interfacing with Bank Secrecy Act and Know Your Customer regulations, understanding that not all of our crowd, either in person or remote, is a banking expert. So let's spell out all the acronyms when we say the acronyms. But first, at Genubank, you've got this passion and you have an ownership group that wants to pursue it, that wants to show the value of decentralized IDs. What are some of the first few steps that you're taking?
It's baby steps. So number one, talk to your regulators. So I'm not going to be saying anything today that's going to surprise one of my regulators.
We've got some of your former regulators in the room.
Oh, was this like, this is your life? Who do we have? We have FDIC?
We've got at least one FinCEN veteran in the room.
FinCEN, okay. Oh, okay. All right, so everything I'm saying is going to be perfectly compliant. And really, I can't convey that enough. There's a lot of, I think right now, the Treasury Department today just released a paper on kind of like neobanks and how bank and fintech partnerships work. I haven't read it yet, but what I imagine is going to be in there is there's been this movement where I think there's a lot of fintechs that are moving fast and breaking stuff. And I think that regulators, Michael Hsu of the OCC and the new chairman of the FDIC, their position is that regulation's been on the books for a long time. It exists. We should be able to responsibly innovate within the regulation, and I can't agree more. So when we're talking about a change, it's not going to be a wholesale change overnight. So when it comes to DIDs, the real benefit here is showing, hey, there's this emerging technology that cryptographically it's going to increase our visibility. It's going to increase our ability to pattern match. It's going to increase our ability to decrease fraud and protect consumers. So the way that starts is, for us, we have a research and development arm, and that research and development arm works hand in hand with our regulator to make sure that we are getting permission on any sort of activity. And we're starting with KYC, verifiable credentials, really embracing the W3C standards. So it's really important to us that we follow standards, and we're crawling along and we're showing them real world use cases where this could be powerful, showing that data portability and privacy preserving credentials are the future. And so they're receptive. There's a lot of pockets of innovation. Specifically, we've had some great conversations with the Federal Reserve in San Francisco at the highest level. They published in July of last year, they published a paper on identity, which was really, really good to see their interest in that. And it's about going slowly and, like I said, responsible innovation. So we have a couple business plans. We have some strategic plans that are under review right now, and the lines of communication are open, and those are productive discussions. One thing I will say that I feel for the regulators, it's a target-rich environment right now. They're busy. They don't want necessarily, it's difficult for them to parse out who's good and who means well and who is going to, spend customer funds on penthouses. Yeah. But if you go slowly and you show them the way that it can improve, financial inclusion and privacy, we're not in this to scale. We're not trying to be a unicorn in the next 2 years. This is going to be a lifelong commitment. So I think we're really, really devoted to doing it correctly.
In a minute, I want to ask you about what customers might experience when the first few Web3 ID options or opportunities roll out from the bank. What might a typical retail customer see, and how might they be encouraged to take advantage of different, probably competing Web3 ID products facilitated by their bank account? Like, what's the customer experience? Before I ask you that question, I want to ask the Web3 ID team to get in position for Q&A. We're going to have time for a couple of questions for Peter. We've got at least one other microphone up here, so we'll be ready for that. But let's ask about customer experience.
Yeah.
What is a customer going to see? Maybe somebody who doesn't know anything about decentralized identification, but here's a bank that wants to offer them that possibility. What's the customer experience going to be?
I think it's all about leveraging the different issuers of verifiable credentials and really being able to dissect that verifiable presentation and append certain information to it, and making sure that you're meeting your standard KYC requirements. So I'll give you an example. We hope to be an infrastructure provider that can provide a bank account that can be originated off a verifiable credential. That's not a super novel concept, but the execution's pretty difficult. The way that we're going to have to start with that is a kind of private consortium type approach, where we are sharing information with the different issuers. Eventually, we'll be able to get the regulators comfortable with that, and then hopefully we can progress to, zero knowledge proofs. Can you imagine? I wrote a paper with a couple colleagues, and there is a future state you can imagine where we call it zero knowledge KYC, like ZK KYC. There are a lot of elements of the ecosystem that have to be built out for that, but imagine being able to open a bank account. The bank can, in a very compliant manner, honor that bank account and do all of the monitoring they need without necessarily knowing all of the information, like your mother's maiden name and things like that. That's all IDA, IDV, old school style KYC. But through education and through iterative processes, we really need to do a good job of explaining to the regulators, like, hey, trust the math, right? Because you should trust the math of this ZK over and being signed by an issuer that as opposed to, there's 5,000 banks in the United States right now. They all do their own KYC to varying degrees of quality. So standardization of quality, that's just one use case. And then you get on the back end when you start talking about compliance with monitoring, be it a Bank Secrecy Act, travel rule. Internationally, is very, very important. Different jurisdictions have requirements there. We have the technology now. We're starting to come upon the use cases. I think we're right on the cusp of being able to show people, but we have to go slow, and then we need to get the regulators bought in. We don't need more regulation. We need to do a really, really good job of convincing regulators that we are going to meet and exceed the regulatory standards that are already on the books.
Thank you. We're going to call for audience questions in 1 second, but fast question for you, Peter. I think we've got issuers of digital credentials in the room. If they want to participate in this, what should they do?
We would love to talk to you. We're talking with a number of consortiums. We have a verifiable credential standard ourselves. We're following W3C. We have very, very few. Our requirements are that it's open source, that's following W3C standards. We might be in conversation, but if we're not in conversation, we would love to speak with you. We would love to be able to be the thinnest layer of banking to and just increasing financial inclusion across the board. We imagine we have a view of the world that non-custodial wallets with fiat interconnects, verifiable credentials. That's the secret sauce. That's what the future is going to look like, and we're working really, really hard too. We're probably fans. I can see. I met a couple people last night. I'm using the products, and we're doing a thin wrapper around them. That's a lot of the innovations at the edges. We're not going to get to the trust triangle overnight. So we're willing to take that kind of intermediate steps in order to eventually realize the promise of what Web3 could be.
We've got time for one or two audience questions about the adoption of Web3 ID in banking. Any audience questions? We've got one in the center there.
Hi, my name is Eric Peterson. You talked a little bit about Web3 ID or verifiable identification with programmable currency. What are some innovations and benefits to consumers that you see coming out of this, putting together these two technologies?
I think one of the problems that's holding back digital assets right now is the centralization of characters, right? Like compliance right now has to be centralized, and let's take centralized exchanges. They do compliance somewhat reluctantly, very reluctantly, as we've learned. And the closer you can push that to the edge, making verifiable credentials sitting right next to your digital assets in a non-custodial wallet. Being able to have a non-custodial wallet that has a DID agent that's able to negotiate those things, I think that creates more uniformity, and I don't think that's going to be difficult to convince regulators. So I'll give you an example. DeFi summer, impressive. We learned so much, right? Like Uniswap on any given day does with 30 employees does the same amount of spot volume as Coinbase, which has they used to have 4,000 employees. I don't know where they're at today. So like the massive efficiencies you get, right? But that's only part of the equation. There is no compliance to Uniswap, right? But then you layer in verifiable credentials potentially and a license because it's banking. And you have the world's most efficient bank. I mean, that if it were a bank would be an unstoppable bank with a 10% efficiency ratio and insane ROE, and it's the way that transactional banking should be. And all of the compliance is done per transaction, on-chain, totally visible, and you can do it cryptographically in a privacy-preserving way. You can encrypt it such that the government has the ability to look into some of the activities. It's a better approach than the systems we have now. There are a lot of systems that get sold that are simply based on surveillance, and frankly, that can be problematic. You get a lot of type 2 errors when people get their bank accounts shut off a lot, And so giving better tools to regulators, getting better insight into data flows, ultimately that's better for our financial system.
Thank you so much. I think we're going to have time for one more. In a minute, we're going to be calling up Tanya Riley of Cyberscoop in order to kick off our executive branch fireside chat. Very excited about that, but maybe one more question from our audience.
Thanks so much, Peter. My name's Jordan. I'm with Circle. We issue our own. We have our own consortium.
We're big fans.
Oh, thank you so much. Well, same. I'm curious if you had any thoughts on. You talk about verifiable credentials. That's something that we're working on. But in terms of the sort of more public discourse around the open source decentralized, as Vitalik Buterin calls it, a soul-bound token, I'm sure this is something you get asked a lot, but where do you see the bright line differences between something more decentralized like that and what institutions are doing, and why aren't they compatible?
Yeah, I think so. I won't. You didn't set. This is not a plant, but we're big fans of Verite. What the Center Consortium is doing on Verite, we're in talks with Verite on how we can participate there. Soulbound tokens specifically, I think Vitalik is. I mean, he gets most things right. Like, that guy is off the charts smart. I don't agree with soulbound tokens. It's not ENS, soulbound tokens. It's not privacy preserving, correlatability. It's not what we need, right? It's not even, honestly, it's not good. It's not a good solution. I think that, Vitalik can't solve all of our problems. So maybe that's one thing that maybe he hasn't given the most thought to. If you read his blog post on it, it's very much about badging. It's about non-transferability. There is absolutely a place for that. It's a good idea. But when we talk about the power of verifiable credentials, we're really talking about the portion of the internet where your privacy is very, very important. Payments, transactions. You don't necessarily, you want security, you want trust between counterparties, but you also want privacy. You don't want everybody to be able to interrogate your on-chain activity and see everything about you. So there's a place for privacy preserving tools, and I think soulbound tokens, unfortunately, it hits a limit to what its utility is. Now, if you want to put your Dungeons and Dragons character up there, that's totally cool. But do you want to do more than that? No, I think you want more privacy.
Follow-up question from the audience was, do you see that changing over time? Was that what you said, Jordan?
Yeah, zero knowledge is, we're just now starting to scratch the surface. Absolutely. It's going to be about putting in the infrastructure that can generate the proofs, verify the proofs. Verifiable data registries have to be built on that architecture. And then roll-ups. Roll-ups are so important, and we're just starting to see that. You see Starkware really starting to come into the space and do well. So in my opinion, this is 1978, and the Apple One just got released, and we're not going to get to the iPhone, which was released in 2007 right away, but it's exciting to think about, right? Like, we've broken that barrier in 77 when they were building the Apple One. It was like $3,000, and people were like, not every home's gonna want a computer, right? Well, then they broke through that barrier, and it starts opening up other doors. So we are in like the fourth industrial revolution of financial services. So it's an exciting time to be a part of it.
In a minute, I'm going to invite Tanya Riley of CyberScoop and Carol House, the former Director of Cybersecurity and Digital Innovation at the National Security Council, to the stage for our executive branch conversation. But before I do that, Peter, any closing thoughts?
Keep working. It's on all of us I'm excited about the Web3 ID Forum because I get to come and talk to people way smarter than myself. Last night was a great opportunity to hear what everybody's doing. Learned a ton from Kimberly at LexisNexis. There's this tension, I think, between incumbents and what the emerging technology, and she had some great perspectives on, aligning incentives.
More on that soon.
Yeah, so it's been a great group so far. I appreciate the invite, and I hope to be really active in the group and would love to talk to anybody who wanted to work on a collaboration.
Please join me in thanking the Chief Operating Officer of Genubank, Peter Braunz.